everyone, this is Vishal from Equity Guru, and welcome to another chart attack video. Today we're going to be talking about the equity markets. A lot of things have been happening, but we're going to be focusing on the US stock markets. Of course, you guys know I'm a big fan of what's happening on the Japanese stock markets. We've been calling the big moves there. European markets are, they're a bit mixed. They're just testing sort of important resistance levels, but that is sort of the theme here. Major technical resistance levels possibly being approached, well, definitely being approached on the U.S. stock markets, and what that means going forward. On the day I'm recording, it is a holiday for the U.S. stock markets, so you can see that on the futures there's a bit of a pullback here, but not too much. But we did have a red day on Friday, and it's probably just a pullback there, right? That's what a lot of people are talking about. But we'll look at the long-term charts because there's major resistance levels that I want to show you guys. And the whole idea is, are we going to reverse, right? Are stock markets about to start a new downtrend when we test this key resistance level? Or are we going to continue? And if that happens, if we do continue higher and close above these major weekly resistance levels, we are going to print new all-time record highs for the US stock market. So perhaps we should talk first about the fundamentals before we talk about the technicals. So the fundamentals, a lot of people are saying that the reason why the markets are in a rip-roaring rally since the beginning of June, which again, I'll show you guys on the charts, is because the Fed is almost done raising interest rates, right? We heard from the Fed this month. They said that they're pausing, right? There was no rate hike in June. They're pausing, but they do expect two more rate hikes to end this by the end of the year, and then they're done. So the market really loved it because now, we are near that end of the rate hike cycle. And if you recall, during the beginning of 2023, many analysts were saying that that's going to be the key trigger or the key catalyst for markets to rally and possibly rally into new all-time record highs. So currently I'm looking at the Fed Fund Futures, the Fed Watch tool on the CME group. The next Fed meeting is in 37 days. It is on July 26, 2023. Currently, this is where we're sitting at 5 to 5.25% on the Fed funds. But right now, the market is expecting, a 73.2% chance of a 25 basis point rate hike in the next meeting, taking us to 5.25 to 5.50%. So, it looks like the market is already pricing the next hikes in because they're happy that the Fed is pausing and almost done, or maybe they're not, right? Maybe we will see a stronger rejection point. And again, this is where the technicals come in handy because we are approaching, as I said, a major zone where some bears might decide to enter a short. On the opposite side, if you are a bear, you're probably entering short because you believe that the Fed is going to keep rates high for a very long time. And again, they're still going to raise rates two more times by the end of this year. And that's going to cause, problems for the consumer who are into a lot of debt and maybe a slowdown in the economy. And you get that recession, which would be bad for U.S. corporations and earnings and, would cause the stock market to decline. So that's on the opposite end of the spectrum. So you have this idea that there's this Fed terminal rate, bullish catalyst, or Fed terminal rate leads to, not a, they use the idea of a soft landing, right? That's not going to happen. And instead, we do see the real economy get hit with a recession, and that would be sort of your bearish stock market. So let's look at the U.S. markets. We will look at the S&P 500, the Nasdaq, and the Dow Jones. And as I said before, very strong June for most of these markets here. The Nasdaq sort of been going before that because of positive earnings from some of these tech companies. But the Dow and the S&P 500 had this major breakout, pullback, retest, nice engulfing candle here on June 1st, which has led to just this uptrend being developed, right? So we had a move up higher, we had a bit of a pause, a move up higher, We're maybe in this pause area again before we continue higher. I just want to show you guys, I've drawn this trend line here because a lot of technical analysts are talking about this channel. And again, I guess you could draw it this way as well, just to make it clear that we are in a channel with the markets just respecting these zones. But this upper trend line is much stronger because we have multiple touches respecting this, almost like six touches here. One, two, three, four, five, six, right? Touching. So it's very, very strong sort of technical zone. And it's interesting that, we are very close to that area and we are seeing a bit of rejection as well, right? So a lot of technical traders, what they will do, when they enter their trades, they will put their take profits near some sort of resistance zone. And that could be why you see a red candle. And if more bears do jump in, then you could see a trend reversal, right? And where we are heading now on the S&P 500, you can see I have this 4,500 zone marked. So I'm going to go up to the weekly chart because I've talked about this in a recent article. Stock markets approach key resistance is a new downtrend about to begin. And a lot of analysts, technical analysts are talking about this zone, 4,500 zone on the S&P 500 on the weekly chart, major resistance level, right? It's a major flip zone, which means it has been both support and resistance multiple times in the past. One touch there, two touch here, three, four. Now we are heading up to retest that zone. And it's important because this is actually where the breakdown of that uptrend happened, right? The COVID, after we recovered from COVID, markets made new record highs. And in the month of January 2022, we broke down below the previous higher low, which basically triggered this bear market, right? Which you can see here with lower highs, lower lows, lower highs, and lower lows. So we're now back to retest, or we're about to retest that key 4,500 zone, which might see, the bears enter, right? So I just want to make it clear that going forward for all these markets, what we want to see, if you're a bull, you want to see a weekly close above this resistance level. A very nice weekly close, because if you get that close above it, we've taken out that resistance, and that means that we are very likely going to print new all-time record lows. If you are a bear, you might see this nice, strong red candle or rejection, maybe a large wick like this, as we have seen the past two times we've retested 4,500. But I wouldn't say that's a major. It's a sell trigger. We'll probably pull back, right, if we get a candle like that. But I'm not going to say it's like a new bear market just yet, or a new downtrend, sorry, just yet, because I think for that to happen, we'd want to see a close below this 4,200 zone. So a rejection here might lead to, a pullback, a sell-off. It might just be a corrective move in an uptrend. Or, as I said, if we take out 4,200, that will get a lot of people rethinking about this idea of stock markets making new all-time record highs with this recent rally. So key level about to be tested perhaps this week or in the coming weeks. The Nasdaq is also very, similar sort of setup where we are approaching that resistance zone here at the 15,000, I would say 600 level here. And, interestingly enough, we did see a sell-off very close to these levels on all the equity markets last week on the weekly candle. And as I said, I sort of see that as traders, entering long on the breakout way back here and having their take profits, sort of near these resistance levels, because that's generally where you take your profits, near support and resistance level, depending on the trade that you have taken. The chart that I find the most interesting, though, when we factor in this key weekly resistance level, is actually the chart of the Dow Jones. As you can see, this is the weekly level that we've had in the past around that 34,500 zone. And the Dow, which is a market that hasn't really done much, right, since December of 2022. It's just been sort of rallying, in this range here. It's actually been testing this key weekly resistance level this year already quite like multiple times. And you can see how many times we've actually rejected that weekly resistance level. And last week's candle actually also saw a rejection here as well. So we are actually already testing that key weekly resistance levels. And I find it fascinating because If this market does reject here and has been rejecting, perhaps it means we're going to see the same for the Nasdaq and the S&P 500. But on the other side, if the Dow Jones is the first one to break out and close above its major weekly resistance level here at 34,400, perhaps that is the catalyst for it will increase the probability that the Nasdaq and the S&P 500 will follow and close above its weekly resistance levels and basically set us up for a move into new all-time record highs. So this is the market that I'm closely following this weekend, for the week ahead, because you can see we are pretty much at that weekly resistance level. Now, just gone down on the daily chart just to show you guys, how strong this level has been. You can see large wicks here indicating, sellers stepping in near that resistance level. And we had one also last week on the daily candle. So we are there right now. And I just think that this week and, as I said, the next few weeks, from a technical standpoint, because of these major weekly resistance levels, are going to be very important for the stock markets ahead. So that's it for me, folks. If you enjoyed the video, give it a thumbs up. Be sure to subscribe to the channel. More importantly, I'd like to know what you guys think is going to happen to these equity markets. Are we going to break out from these major weekly resistance levels and reach new all-time record highs? Or are we going to see the bears step in and perhaps, kill the dreams of the bulls going forward? Let me know in the comments below. I'll see you guys all in the next chart attack video.